Hello and welcome again. In this lesson we will continue with the income tax. Now we will look at one of the additional items which we will put in our income tax pro forma. Income tax pro forma was one which we have seen in our first lecture, description, then non-savings, savings and dividends. In the description we listed out different sources of income, one of which was property income. Now property income is chapter number 3 in your lecture notes. I assume that at this level you have already downloaded the lecture notes. If you haven't done so, please make sure you download the lecture notes, and we will see together as well. We will read together lecture notes. Alright, but before we move to lecture notes, let's talk about a little bit about the property income. Now property income is an income which is earned from the property, as you can easily know from the name. It is property income. So property income could be earned in different ways. Say for example, if you have an extra room, you have a big house, you have extra room and you want to let it out to someone so that you can earn some money, that could be property income. Say for example, if you have a big house and you want to let all full house and you're getting some rent, that will be also property income. But how can we calculate the property income? What would be the ultimate figure? What would be the ultimate figure which we will put in our income tax pro forma? Because we will do some stuff here, definitely, otherwise there was no need to make a separate chapter of property income, right? So we will take the figures, we will do some calculations with it, then the ultimate figure will go in our income tax pro forma in the non-savings income, if you remember. Alright? So how can we calculate the income? How can we calculate the property income? First of all, we will take the premiums. So we will take the premium. So whatever the premium is which we have received, assuming that we are the landlords. So premium is the amount. You might not know what the premium is. Say for example, if I have a property in a very, very special area, very posh area, say for example in central London, in congestion area, so if I have a property there, then what happens is that because it is very, very expensive area and I want a very high rent in that area. Now not only I want a very high amount of rent, but what I want is that I will pay that property, I will give that property to someone who will give me something in advance as well on top of what he will pay on for the rent. So for example, if I want £50,000 rent for my property, and whoever pays me more in premiums will get the property, because my property is very, very precious. Everyone is looking after, everyone is after my property. All right. So say for example, a few people come to me and they say that, although we will pay you the rent, we agree on the rent, but let's talk about the premium. Then one guy said, I will pay you £20,000 premium. The other one said, I will pay £30,000. So whoever is giving me more premium, I will give the property to them. Now when I say I am giving the property, it does not mean I am transferring the ownership. I'm just letting the property so that they can use the property if they want to live in it or whatever. All right. So I will get the rent as well. They will pay me the rent, but they will also pay me the premium. So premium is the amount which they pay in advance, which is in most cases not refundable. All right. So we will take the premiums and we will add it here. Now the question is, how can we calculate the premium? Another thing is also that whenever you see word lease in ACCA F6 and P6 exams, lease means not IS 17 leases in accounting. Leases means long-term rental agreement. So forget about the accounting and just think about as a long-term rental agreement. All right. So whenever the word lease comes, please make sure that you understand it by long-term rental agreement. All right then, how can we calculate the leases? How can we calculate the premium? Now that is another thing, how to calculate the premiums. First, what we do is, obviously when we give the property to someone, it will be for some specific period, because as I said, it is on the leases. Leases means long-term rental agreement. So if I let the property, it will be, say for example, for 10 years or 20 years. So all right, so it could be for 30 years as well. So what we do is we'll take the premium. So we'll take the amount of the premium. Then what we'll have to deduct is we'll take premium multiplied by n minus 1 into 2%. Alright, so that will be the amount which will be deducted out of the premium. Alright, so first we will take the premium. Then what we do is we deduct 2% of what? Excuse me. So we take the premium and then we deduct is premium multiplied by n minus 1 into 2%. So that is the amount which will be deducted out of the premium. So the final figure, this is the figure which will go in here in the premium section. Excuse me. Alright, so this will be our premium. Now we will add the premium. Then what we do is we also add a rent, but it will be on accrual basis. Alright, so we add the premium and we also add the rent as well. So these are the only two things which we receive from our tenants. Alright, now after doing that, what we have to deduct is all of the expenses. Alright, and definitely there will be revenue expenses. Alright, so expenses could be of many, expenses could be of many sort. We'll see in a minute from our notes. You know, there could be maintenance, repairs, you know, lots and lots of expenses. Alright, so we'll deduct different expenses. So what first we need to do is we take the rent excuse me, on accrual basis. Then we also take the premium as well after doing some calculation on premiums, and then that is the amount which is total. Alright, so after that we deduct some expenses out of that, and the final figure will be either our property profit, or it will be our property loss. Alright, so that will be our net property income. Net property income, it will be either income or it could be loss. Alright, now say for example if it is a loss here, it can be carried forward and it will be set off against the future property profits. Alright, so say for example if it would have been a loss, then we will carry it forward for the future years, and it will be set off against the future years property income. Alright, so that is our property income, and how to calculate the premium as well. Now I've just said that there will be expenses, but it could be of many sort. There will be lots and lots of expenses. Now one of the expenses has recently been added in our P6 syllabus, which is Finance Act 2016. Now I'll just go ahead and share the screen with you. Here you go, as you can see on your screen. That is chapter number 3, property income. Now what we do is, first of all, we take the income, as I mentioned on the board. In the incomes we take rent on the accrual basis, and we also add the premium into it. Now after adding the income, what we deduct is some expenses. Now our expenses are on the accrual basis as well. Now what are them expenses? First of all, we deduct the repair and maintenance. Then we deduct advertisement, agent's fee or commission, insurance expenses, water rates, bad debts, council tax, redecoration, interest paid on loan, and other revenue expenses. Alright? Excuse me. Now the last one is replacement of domestic items relief. Now this is the relief which has recently been added. It wasn't in our syllabus in our previous Finance Act, which was Finance Act 1516. Now replacement of domestic items relief wasn't in our syllabus previously, but if you have given the exam recently in our in the Finance Act 1516, in the Finance Act 15, which was tax year 15-16, then you might remember there was something called water wear and tear allowance. Now wear and tear allowance is no longer in our syllabus, so the new thing is replacement of domestic items relief. Now as you can see, it is available only on the replacement. So say for example, if you buy an item, if you buy a domestic item, we'll see what the domestic items are in a minute, but say for example, if you buy a domestic item, you will not be able to claim this relief. However, if you replace it with the old one, only then you will be able to claim this relief. All right. Now another condition is that the old asset and the new asset must be of same category. All right. Say for example, if you excuse me, if you had a washing machine and a dryer together in the same machine, and then you replace it with only washing machine, then this will not be applicable. Then we will have to see the actual cost of a replaced washing machine and a dryer in one machine. Only then we can claim it. All right. Otherwise we cannot claim a replacement of a domestic items relief. All right. So the most likely is the examiner might ask you to do that as well. All right. So please make sure you know the rule that the item must be of the same category. All right. Now what are the domestic items? Now domestic items does not include a fixed item which is part of the building. Say for example, a boiler is not part of the, we cannot calculate, we cannot claim a replacement of domestic items relief on items which are part of the building, like the boiler I said. All right. However, if you buy a machinery, say for example, if you buy a washing machine or a dryer, all right, or a cutlery used during our daily lives, now you can claim replacement of domestic item relief on that. All right. So these are the items which you use on a daily basis in our houses. Now you can claim the replacement of domestic items relief on that. Now what happens is that because it is a replacement of the domestic items relief, now say for example, when you are replacing an asset, obviously you are selling the previous asset. All right. Now when you sell a previous asset, then you buy the new asset. Now the amount which you have sold the old items for, that will be deducted out of the replaced cost. All right. Excuse me. Now say for example, if you have replaced a washing machine or a television, and the new cost of the item was the replaced cost of the item was I don't know, £100, right? Now the old asset which you have replaced has been sold for £15. Now the net amount is 100 minus 15, £85. All right. Now that is the amount which you can put here. You cannot put the £100 which is the amount which you have spent. You will have to deduct the amount which you have gained while selling the old asset. All right. Now the net figure will be either profit or the loss. And again, I would say if it is a loss, you can carry it forward and you can set it off against the property profit of the future years. All right. Now in the notes it says capital expenses are not allowed as property expenses. As I said to you earlier, depreciation is not allowed. That is important point. We cannot deduct the depreciation from this property income. All right. Now if there is a property loss, then it can be carried forward to set off against property income of the future years. I've already mentioned you that as well. On the next page, if you see page number 11, this is a way to calculate the premium on leases. Now say for example, if Mr. A was the landlord and Mr. B was a tenant and the lease was for 20 years, now how can we calculate it? I've mentioned you the formula on the board. Now we'll see how to calculate it. First we take the premium. Now in this example which I've shown you on the in the notes, the premium was £20,000 paid and the lease agreement was for 20 years. All right. Now it says the formula is we'll take the premium, then we'll deduct is premium multiplied by n minus 1, and we'll take 2% of that, and that will be deducted out of the premium. Now what does n mean here? N means the number of years for which the lease was granted. Now on the right side of the notes, If you see, example is £20,000 less 20,000 multiplied by, which was the 20 years, less 1 multiplied by 2, so the net amount is 12,400. Alright? Now after that, it is a rent a room relief. Rent a room relief. Now we will see rent a room relief in our next video, and we'll do a little question as well of rent a room relief, and we will do another question which is relevant to this bit which I have shown you on the board property income. So we will deal with the replacement of domestic relief as well. So I will see you in the next video, and we will do a couple of questions, and we will see how to calculate the rented room relief. Alright, so that's it for now, and I will see you in the next video. Thank you and goodbye.